All right, we should be good now. Technical difficulties, everybody. Technical difficulties.
It is okay because we are live for night school, and I am glad to be back.
What's going on, y'all? Let me know if y'all could see us, if y'all could hear us, if y'all ready to learn something. Y'all got y'all big pens ready, y'all 5-star notebooks, college rule, not wide rule. You know, we real particular in here.
Man, listen, pull them out, pull them out. It is note taking night, okay? We are back in night school. I'm taking notes tonight. I am back taking notes.
That's a fact. That's a fact. Because, you know, a lot of people, when they do their due diligence, I don't hear too much about the reports. I don't hear too much about the financial reports. I don't hear too much about the earnings and the, you know, they just want to show me the support and the resistance level. They want to show.
That's me.
They want to show me
I gotta do better, bro.
bands.
I gotta do better. So I'm about
life is bigger than the Bollinger Bands.
Man, listen, I'm about to get that refresher on these 10 Qs from our cousin Saeed. All right. He's gonna grace us with some gems about our platform potentially. So this is gonna be a good one. So please take notes, fam. Please take notes tonight. It's gonna be a good one.
That is a fact. We got my man Sahib in the building. He's keeping it very grounded. He does not have a camera, ladies and gentlemen. So it doesn't even matter. You don't need to see him. You need to be paying attention to his presentation anyway. He about to run through and teach us how to read earnings reports efficiently, what to look for, how to read the 10Ks, the 10Qs. Some of y'all are familiar with these things, but never really read them. Don't lie. Some of y'all may have never heard of these things. Some of y'all may be looking at them on your own and not really knowing what you're looking at or what you're doing. So we're going to run through all of that for y'all today. We're going to make sure that we break some of these things down to the basics. So we used to do sector Sundays to start, where we had groups every week break down a specific sector. That was like last year this time probably. And then we did individual stocks. So we would have groups break down different stocks in different sectors. Then we did the bull versus bear case. That's what we did on YouTube last time. Real spicy. If you haven't watched those and you want to see how different cousins break down companies or examples of how to break down a company, you can go back and watch those sector Sundays. Shout out to Dave, or was it Dave? Yeah, David, King David. Yep.
Yeah.
Shout out to David. He won it all. Matter of fact, he's gonna be back here next week teaching us something else. But yeah, so we doing supplemental Sundays now. So we know Mark and Jolene, they come on every Tuesday and Thursday. They drop all the wisdom they got for the week. But sometimes there's gaps in some of the basics because they started on like a different level. They started out with options. They didn't even start with the stocks. They started us out with the options. So there's a couple things that never really got broken down in detail. And so that's why we here to gather y'all, the people, to present different information and break down some of these basics so everybody's on the same page. If somebody has a question about something specific, we got a video to point y'all to. You feel me? But I'm not going to talk too much longer. We came on a little bit late. I apologize. A couple technical difficulties. It's been a minute since me and AJ went live on YouTube, so we had to get some things together. It's been a little minute. You know what I'm saying? But just know that minute didn't go to waste. We put something real nice together for y'all. It's going to be every week. Mark and Jolene are taking this week off. So I do believe that they said they was going to go on Tuesday. They're not going on Tuesday this week. So what you're going to have this week is this Sunday, and you're going to have next Sunday. Now, they might drop a video in between there, but they're not going live, just so y'all know. So just make sure y'all paying attention. Y'all really doing y'all due diligence and staying focused in the market. Just because they're not coming on live doesn't mean you take the week off too. If you still got bread in the market, it's still something for you to learn. You feel me? So just make sure y'all staying on point, stay ready so you ain't got to get ready. With that being said, we about 10 minutes in. AJ, did you have anything else?
No, I'm excited. Let's break down these company report cards, bro. Let's do it.
All right. For sure. So y'all take y'all shoes off in the house, get comfortable. You feel me? Get your glass of water. See, you could go ahead and bring up your presentation, bro. Let's get to it.
Alrighty. How's it going, everybody? Hopefully you guys can see the presentation all good and well. So today we're going to be breaking down the fundamentals of how to read and interpret 10Ks, 10Qs, and the earning reports. So this is the agenda we have for today. We're going to start with the overview of what these the 10K, 10Q filings and the earnings reports are and their differences, as well as a few bonus filings. We're going to set it in order of priority of what's recommended when you're starting out and how to break down the company using these reports. And then we'll learn how to read and access these reports using a bunch of tools and resources that will be given out in the presentation, and how to do it efficiently without getting too lost in the sauce. And for number 4, finally, we'll show example using XPO Logistics, going through their actual 10K, 10Q, and earnings reports, and end with a conclusion. So first of all, what is a 10K? A 10K is a comprehensive annual report filed in Q4 to the SEC. And this could be accessed multiple ways. One is through the EDGAR SEC database, as well as the investor relations page of a particular company's website. And key sections in the 10K filing is the business overview, it's the risk factors, financial data, management discussion and analysis, and audited financial statements. And so this report is kind of gives you the whole overview of a year of what's going down, the nitty-gritty of the company. The annual report is very similar to this, and in a lot of cases, many companies actually file their 10K as their annual report, but in most cases, an annual report is meant to be similar to the 10K, but has a lot more color, more graphics, it's more colorful, and it's a little bit more concise with not as much data and numbers. And this could be used as a good marketing tool to attract investors. Similar to how we had a Come Up Series episode, I believe it's School Spirit, that broke down a pitch deck for Airbnb. Annual reports are similar in that sense, where they kind of give you a whole nice breakdown with visuals of what the company is doing and their financials. So then we have the 10Q, which is a condensed quarterly report. So usually there's 3 of these in a year. And these relate more to the recent financials and earnings data that you get. So the 10K might be, for example, for 2020, and the 10Q will bring in financial data for the last 3 months and 6 months to get a more accurate read of what's going on in the company this year. And this will show updates to material risks, which is risks that have importance to the investor. And then we have finally earnings reports. So these are performance-based, and this is what you might have heard Mark call the report card. Every company has this report card every quarter where we check in and see if what they have planned and given us guidance for is really shown out through the results and their numbers. In an earnings report, we're generally looking at the earnings per share, the revenues, their net income, and their updated financial statements, which include the balance sheet, cash flow statements, and the income statement. So key differences, as I mentioned earlier, 10K, it's filed yearly, done once a year through the SEC. With the 10Q, it's done quarterly, so you'll get 3 of them a year. And the 10K is really in-depth and covers all the details of the company, while the 10K really focuses on the financials of the recent quarters. So 10Ks are generally audited, and you'll notice when we go through the 10Q, it will show a disclaimer that these are unaudited reports with the financials. So for the 10K, SEC filing needs to be done within 90 days after the end of the company's fiscal year. And then for the 10Qs, within 45 days after the end of the company's first fiscal quarter. For the preparation of the 10K, 10Q is needed, but 10Q does not need the 10K. And here's some bonus definitions, because there are a lot of filings you'll likely see when you're going on an investor relations page or you're looking through the Edgar SEC filing database. So the 8K is actually really helpful as well because it kind of breaks down any news releases that are important to investors. This includes acquisitions, sales, any news events that they have, NVIDIA with their ARM acquisition and, AMD with their Xilinx, that will definitely be an 8K. An 8K for XPO, which is what we're going to be covering, is their GXO spinoff. So they actually had a spinoff from their company and kind of split their logistics side and their freight side to two different companies. So that's something that would appear in the 8K, and I'll show an example of that as well. Another thing is executives, whether they are leaving the company or they get elected, that'll be something that'll be brought up in the 8K, as well as bankruptcies. Now, Form 4, this is something we might be familiar with recently, as Elon has been selling a lot of shares of his company, and he's been doing it through these Form 4s. And basically, this tells you the change in ownership of the executives of their shares and what they're holding. And so these are the insider transactions that something you can look up in things like E-Trade has this available, for example, where you can look at the insider trading activity. And this will cover the buying, selling, or exercising of stock options from chairman to board of directors to the CEO themselves. There's also another thing called the 20F annual report. And this is essentially like the annual report of 10K of foreign countries that are outside the US and Canada. And for example, this would be BABA. And one important thing to note is with 10Ks, like I said, is very concise. And with certain companies, you'll notice that a good 10K does not have to be long. It won't be hundreds of pages. For example, if you look it up, Amazon has a 10K and it's only 80 pages, which is a really good sign for a company because less pages means they probably have less issues and they're reporting everything that they need to. On the other hand, a sign that a company might be struggling or has a lot of issues is when they have many pages in their annual reviews. Or for example, in this case, BABA and their 20F, they have actually a 355-page report. And you can guess 60 of those pages are all related to all the risks they have with their regulations. So these reports will tell you a lot of these things before you even consider them. Early on in the year, BABA had already created this 20F early 2020 detailing all the regulatory risks that they had. So it's a really good thing to pay attention to as well. And then lastly, we have the DEF 14A, which is basically a proxy statement. And this is kind of a filing that's done for shareholders. Anything that needs to be voted on that's significant, these filings will cover that in detail, what's being voted on. And it also gives info on executive compensation. So how much executives are getting paid for in shares or stock options. So this example of an 8K, like I was saying, it might be a little bit hard to read, but if you see that this was filed in July 12th, and basically it details XPO Logistics looking to announce in a press release that they'd be having a spin-off company called GXO Logistics. And this is something that you can pull up on their investor relations page or the Edgar SEC filing database. So this is my recommended process for how to break down all these reports. Step one, you'd want to begin with reviewing the 10K or annual report. And for first timers, it might take a little bit of time, and that's okay. It might take 1 to 2 hours, but with the checklist I'll have in the next coming slides, hopefully by following the checklist, you'll be able to do this in an efficient manner. And with more practice, as you look at more companies that you're investing in and the reports, you'll be able to read them efficiently enough where you can get it done within an hour and 30 minutes. Step 2 would be to skim through the 10Q. So this will be a lot more consolidated, like I said. This could take up to 30 minutes if you're just looking at the financials. Step 3, it would be the breakdown of earnings reports, their estimates and guidance. There's a few good resources for this, and this could take as much time as 20 minutes to 5 minutes. And then lastly, we want to summarize all the findings that we got from these filings and the earnings reports and try to formulate our own thesis using fundamental analysis. So the checklist for looking at 10Ks and 10Qs. The questions we need to ask ourselves is, what is the business and how do they create value or make money? And this is something you'll see within the sections of the 10K. Item number 1 is usually business, and item 1A of any 10K will include all the risk factors. So what are the risk factors, like we said, that can affect performance? You'd be surprised when you look at the risk factors in the 10K, because throughout the whole year, they identify all the potential bear cases that your company might face. And this is really good as an investor because you need to know exactly what can happen. And these are most likely the cases that would cause volatility within the stock or even drive the sentiment of the stock. And the next thing to look at is, how does the financial data show growth in the company? This is when you'd be looking at your income statements, your balance sheets, and your cash flows. Next thing is, what is the story the company is trying to tell? And this is done through the management discussion and analysis of financial condition. And essentially what this is management telling you what is their story. They're trying to explain the results to you, provided the information that you're given, the financial data. And lastly, are the vitals healthy? Like we said, in these 10Ks and 10Qs, you get to see a lot of information on the income statement, balance sheet, and cash flows. Now with earnings, the questions we have to ask ourselves is, how does the data align with the current and projected quarter-over-quarter or and year-over-year growth? As you might have seen with a lot of earnings reports in this past quarter, many stocks got crushed right after the earnings because they weren't meeting the standards of growth that they had year-over-year. So when looking at this, analysts and investors are really basing a lot of the earnings reports and the direction the stock will go based on the given guidance from previous earnings reports from previous quarters by the executives and chairmen. And so the next question you have to ask yourself is, has the story changed? Maybe they had a great quarter, maybe they had blowout earnings. For example, Autodesk had very great earnings, but one of the best revenues of they've had to date. But the issue with Autodesk is essentially they had given poor guidance, so the stock had sold off a lot. And that's what you're seeing with a lot of these stocks coming into this quarter 3, quarter 4 earnings reports, like DocuSign. DocuSign is very high growth stock, but after 6 quarters of very solid fundamental growth, the growth has slowed down and it's not able to basically justify the market cap that was given to it. The next thing is, what is the overall guidance given by management? And this is really key, because if guidance does not follow what they were given before in the previous quarter, you'll see the stock suffer from that. And many stocks, as you can see with this previous quarter 3, have had given either a little bit lower guidance or remain neutral because they're not sure what risk factors might come in through 2022, given the supply chain issues that we have. Another thing to identify is, what are the headwinds and tailwinds that can affect the company through the earnings reports. And these are things the CEO will mention that they have, whether it's the chip shortage or supply constraints, whether it's going into the new year with interest rates also affecting growth stocks in the companies. And lastly, how did the company perform compared to other competition in the sector? This is really important as well, because if you look at a space like cybersecurity, that's a very strong, fast-growing sector, you want to see who's the best performer in that sector. And the earnings reports of all these companies will justify whether the stock that you're invested in it will do better than its competitors. So annual report is something we won't cover when we're looking at SPO, but I wanted to provide a cheat sheet for everyone so they can see everything when they go and look at the annual reports on their own for their companies. So number 1, you want to look at the chairman and CEO addresses. And basically with this CEO address, you want to look for any successes or failures that were mentioned by the CEO. This will be notable information that will provide you a better insight to what's going on within the company. Second is the remuneration report and incentives. And what we have is, in this is, you'll be able to see the long versus short-term incentives for managers, basically stock compensation. And what you want with this is a company that provides long-term stock compensation. So you don't have managers that are looking just to fill their pockets in the short term. The second thing is you want to know your board of directors, the tenure they have, and the yearly attendance of the board meetings. This is something most people wouldn't look at when they're looking at the annual report, but the reason why the attendance of each board member in the board meetings is important is because a lot of key decisions are made during these board meetings, and if they're not voted on with all the board of directors present, it can change the direction of the company. The third thing you want to look at is the income statement. And the things you want to look for are the revenues and profits, and how is the growth year over year, or any anomalies that stand out that don't fit the picture of the revenues. Number 4, we want to look at the balance sheet and see if it's healthy or not. And this is the best way to look at this is just by looking at the debt versus the cash. Cash flow is really important with the company. Any company that has steady cash flows, it's consistent, and they're able to weather any storms that they have or any upcoming issues. A company that has a lot of high debt and not as much cash flows could later on struggle. Number 5, like we said, was cash flows. And many of these statements provide the information you'll see for cash flows, but don't give you exact formula to calculate free cash flow. So an easy way to do this is taking the net cash provided by operating activities for continuing operations, subtracting the long-term capital expenses. And this free cash flow is one of the best metrics that a lot of investors use to understand how the company is doing with their cash. Number 6 is the notes and segment report. This is important to read if the company has any very high non-cash revenue or non-cash expenses. You want to know where these revenues and expenses are coming from. Another note in this is the segments. So segments is something basically like if a chip company like AMD has a lot of divisions under it, it will give you all the financial details and performance results of these companies under them. And you want to make sure to see which divisions, which segments of a particular company are doing well and which are not. And number 7 we have is the auditor's report and declaration. Essentially, the only time you want to look at this is to ensure that there's no issues with the counting and nothing's with red flags is raised in this auditor's report. I have a quote here from Warren Buffett. Basically, he had a speech about annual reports, and he said here is that we want to read reports where the management is telling us about the things that we would want to know about if we owned 100% of the company. Essentially, it's really important that when you're reading these reports, you're getting the most simplified version of what's going on. If there's no clear indication and clear communication between the managers of what they're actually doing with the company, that can provide uncertainty to the investors and cause them not to want to invest in the company. So now we'll be looking at XPO's 10K and 10Q, and we'll click on this link to look at the overview of that. So using our checklist that we had before, we can start with looking at the key items in a 10K, which would be, the first section would be business. And over here, you see that company gives an overview of what the business is of XPO Logistics. Here we see that XPO Logistics, together with its subsidiaries, provides cutting-edge supply chain solutions to the most successful companies in the world. The company is the second largest contract logistics provider and the second largest freight broker globally, and a top 3 less than truckload provider in America. By the way, less than truckload essentially means freights that transport goods that don't require a full truckload. And this is one of the most common ways of transportation for small businesses and e-commerce. And as you can go through the business, you can see what parts of their business generate the revenue and what creates value within the company. So you can see the 2 main segments for XPO is their transportation logistics. And logistics now is actually spun off to a different company called GXO, as we will find later on. And as it says in the company overview, that in 2020, approximately 62% of our revenue came from transportation, while the remaining 38% came from logistics. So they've always been heavy on transportation. Within each segment, we are positioned to capitalize on fast-growing areas of demand. So as you scroll through more, you can see its mentions of its planned spinoff of the logistics segment. Now, at this time, in December 2020, is when they actually announced the approval to have a spinoff. And it wasn't until July 17th that we saw this spinoff occur and GXO and XPO split. So investors could actually got 1 share of GXO per share that they owned of XPO. And as when you keep it in touch with these documents, you'll be able to follow along and know when these changes are occurring. It also covers a transportation segment overview, so you know that the main sources of revenue for them on the transportation side is their less than truckload, and actually the truck brokerage services in North America and in Europe. The truck brokerage services is actually a higher source of revenue than their less than truckload. Less than truckload is something that they're building out recently. And so this gives you a little bit of overview of the logistics segment overview, and that's the other side of the business, and that's where the supply chain comes in the hand. They help provide fulfillment for e-commerce and things like that. Now, if you go back to the table of contents, we can move to the next section, which would be risk factors. And risk factors is very important, as we said. This will break down everything you need to know that could potentially hurt the stock in the coming year. So as you can see with XPO, they only have one page long worth of risk factors, which is, oh, sorry, that's not risk factors, that's the legal risks. I'll come into that later. But so the risk factors, it breaks down everything in an order of importance. So you see number 1 is risk relating to COVID pandemic and how that affected their business. And so economic recessions and the other factors that reduce freight volumes, both in North America and Europe, could have a material adverse impact on their businesses. And sure enough, a lot of the logistics companies suffered the most during the March pandemic. And it wasn't until, even till now, where the supply chain is very congested and the pricing of freight and shipping has increased so much that they're still trying to iron all these things out. They mentioned that a reduction of overall freight volume would reduce their opportunities for growth. So what actually ended up happening, especially in current day, is there's so much demand still for all the freight, but the supply isn't able to keep up. They don't have enough trucks to provide. They don't have enough drivers to provide to continue growing the business. So the demand is very high, but the volume of freight that they can actually provide for their services is what's dragging down the growth. Another risk factor we see is with their strategy, operations, and legal and compliance and finance. And basically, they state here that their profitability may be materially adversely impacted if our investments in equipment, service centers, and warehouses do not match customer demand for these resources, or if there is a decline in the availability of funding sources for these investments. So as I mentioned earlier, their less than truckload is a business they want to grow out a lot more, but it requires a lot of significant investment upfront, which would be the trucks and warehouses. And you'll see this impact their income statements later on in the report. Another risk they had was the failure to successfully implement our cost and revenue initiatives, which would cause our future financial results to suffer. So again, they're going through and explaining word for word, what are the main issues, why would they struggle to have profitability, and what to look out for in terms of as they're going different parts of their businesses that might be more cost intensive. So that covers a few of the risk factors, and it continues to go. So another one was that their spinoff of would cause an adverse effect on the remaining businesses and the price of their stock, including because we may become a smaller, less diversified company than we are today. And what we see now with the GXO was they wanted to be one of the leading logistics providers. So they wanted to create a separate company for that. So now we can return back to the table of contents and look at these potential legal risks. So if you look at legal proceedings, this is what I was talking about earlier with them being 1 page long, which is a good sign for a company. If it has a lot of legal issues like BABA, then you will see a lot of issues with liabilities, lawsuits, and it will be lots of money that will be potentially wasted on these lawsuits. So in legal proceedings for XPO, they had mainly two main cases. It was classification claims and shareholder litigation. And both of these were actually, if we go back to our slides, were solved and recently. And September 2021, they were scheduled to be have the trial for those, and they were ended through a penalty of $30 million. So going back to the last legal issues that they had, essentially was with this shareholder litigation. And as you can see, it mentions the court was, they're waiting for the court to issue a decision on the defendant's motion to dismiss. And basically this means that a motion to dismiss means to throw out the case. So as far as the legal issues, they don't have too many. They've been able to handle most of them throughout the year. Next, we will want to look at the selected financial data, which is item 6 of the report. So with item 6, since this is the annual report, it will only give data up to 2020. And as you can see here, the main things that we want to look for in this is how the company has performed over a period of time. In this case, a period of 5 years. And we want to see that their revenues are increasing and that their assets are increasing as well. So I have a slide later on that explains what the time frame was for logistics companies and how they performed. But essentially, it wasn't until the second half of 2017 to the beginning of 2018 that there was a lot of demand for freight and logistics. So XPO did really well during those years. And as we can see going into 2019, their revenues did decrease. And in COVID, they're able to keep up, but you'll see within the first half of 2020 is where they had a lot of struggle. And so when looking at the financials, I would prefer to look at the 10Q over the 10K, because the 10K only gives you the broad spectrum of what's been happening over the past 5 years. So moving on to that, we'll look at the data. Also, another thing I wanted to mention, sorry, but just want to include that when all this data is given in item 6, the management will go into item 7, which was the other thing on our checklist. They will discuss and analyze, basically tell you the story of what's going on with their business through their financials in their overview. And this is really helpful, as you can hear their opinions and their point of view of why their performance was as such for the following years. And so in the overview, they explained that XPO Logistics provided solutions to their logistics. As you can see, they talked about how they had the spinoff in 2020 and how they, because of that, you'll see these statements includes all those quarters recently of the 2021 period where they had a separation with XPO and GXO. And so once we go into the 10Q, you'll be able to see how the assets were essentially cut in half, and it would be alarming to a normal person reading the reports. But once we get the understanding and explanation from the board of directors why they separated the companies, you'll understand that it was not actual discontinuation of operating expenses between the separation of the two companies. And financials were being a global provider of supply chains. The businesses still continued during COVID, but the way they ran was a lot slower, and they had to adjust to the issues of COVID. And in response to the pandemic, the governments of many countries and regions had taken or continued to take preventative reactive actions, such as imposing restrictions on travel and business operations, which also slowed them down, establishing guidelines for social distancing and occupational safety. Due to the critical role we play in the moving goods and equipment in the market we serve, XPO is considered an essential business. So that was the one positive, that they were able to still operate while the supply chain issues were occurring. And so continuing on, they explain more about how COVID-19 affected their bottom line and their economic activity, and why their growth had slowed. And this is where you would see the consolidated summary of their financial tables, which is something you'll see in 10Qs as well. It will just provide you the consolidated version of the financials. So moving forward, we'll get to this. This is the chart I was mentioning before, why over a 5-year period, logistics companies performed as they did. The second half of 2017, there was a lot of demand, and in return, you could see the amount of truck orders that were placed in North America. A lot of these companies had to buy more materials, buy more trucks to support the demand, but they did really well during that time. And the beginning half of 2020 we had this issues with COVID. So you see that many of these companies had underperformed, and the orders of the trucks had decreased as well. So now coming into end of 2021, going into the beginning of 2022, what is the outlook going to be? And this is something I got where it said tight truck capacity, an ongoing driving shortage, and rising fuel prices and industry-wide struggles to recover from COVID-19 pandemic are driving shipping costs through the roof. And so the data from the Journal of Commerce indicates freight costs are up 15% in 2021 over already high rates of 2017. So with this data, we can infer that if the costs of freight are increasing, there's a lot more business available for companies like XPO, and we could potentially see more demand than we even did in 2017. So looking into 2022, you can use the data to look at potentially how much demand and how well the business has opportunities to grow coming into the next year. So now I want to take a look at the 10Q, and what the 10Q we'd be looking at is the vitals. So the financial statements should indicate whether the balance sheet has become stronger or weaker over time. The second thing we want to look at is the cash flow statement. Is the business a generator or a user of cash? The third thing we want to look at is whether firms have, it's possible, it doesn't happen all the time, but whether firms have a positive net income while having negative cash flow. And if so, we want to compare the income statement with the cash flow statements to see if there's any red flags. So going to the 10Q, we can look at the consolidated balance sheets. And so this data might be a little bit confusing, and that's why I want to provide a really simple way to look at this data. This is always good to check just to make sure the numbers are right. But one of the best ways, if you want to look at how each company is doing well quarter over quarter, and if their balance sheet is increasing, their assets increasing, is you can go on sources like Fidelity and E-Trade and look up there in the fundamentals tab, all their income statements, balance sheets, and cash flow statements in a much more consolidated manner. So what I have here in the presentation is some screenshots from Fidelity. Sorry about that, just went to the beginning. These show, oh, sorry, technical difficulty. Okay, here we go. So the financial statements, these are the quarterly, annual next to the quarterly for the balance sheet. And this is the balance sheet for quarterly is what you would find in the 10Q. So what we see is that the current assets total has been increasing over the last 5 years, which is a positive sign. And the liabilities have also been increasing as the company is growing and taking on more liabilities and debt. But as long as the assets are above the liabilities, company is in good health. And so the second statement I pulled from Fidelity was the cash flow statement. Cash flow is really important because a steady cash flow is a good sign for the company. And when a company has a very large fluctuations between their cash flow, that could be deemed as bad because they're having issues settling and handling their expenses. So an exercise I wanted to bring us through is calculating the free cash flow, which was something we looked at when we had a formula in the annual review. Free cash flow is a really good metric because it tells you how much cash the company has on hand quarter to quarter. And so looking online, we were able to find out that the free cash flow for XPO this quarter was 418 million. So how did they get this number? This is some math that we can all do together if you guys have your pen and paper ready. So to calculate free cash flow, all we have to do is subtract the net cash provided by operating expenses from continuing operations, which is 558 million, minus the capital expenditures, which would be any long-term debts that the company has. And this would be the payment for purchases of property and equipment and proceeds from sale of property equipment. We don't include other because we're not sure the time period of other and how long of the capital expenditure that is. So when you add add these two together, you get 140. So 558 minus 140 is the 418 million that we get year over year. So that is your free cash flow and how you calculate it, looking at the condensed consolidated statements of cash flows, which is from the 10Q. The last thing we want to look at is XPO's quarterly earnings for Q3. So one way you could look at this would be to go on their investor page and pull the report up. There's also a few other resources I've had as well. If anyone has iOS or access to the Google Play App Store, they can download this app called Quarter. And essentially what Quarter does is allow you to look up any company and pull up their recorded conference call from their earnings, a slide deck if they had it, and the transcript for every interaction within the investors' earnings call. So today we're going to look at the Earnings Whispers. Earnings Whispers is another good resource that you can use whenever you want to look at earnings. They update it quite frequently, so as long as you go on their site, I'll have the link provided in resources. You can look up any ticker you want, and you'll be able to see a calendar of all the upcoming earnings releases, as well as the earnings reports for each company. So XPO, they did pretty well. They had an earnings of 94 cents per share and a revenue of 3.3 billion. They beat the estimate just by 1 cent, which was 93 cents per share, and beat the expected revenues by 200 million. There usually is an earnings whisper number, which could be like a Wall Street number. So it's a little bit even a higher estimate than analysts would give. And so revenues did fall 22.5% compared to the same quarter over a year ago. And this is something that when you're looking through the earnings reports, you want to look at what the CEO had said about the decrease in revenue year over year. Because when looking at earnings reports, we always want to look at how did they do compared to last quarter? How did they do compared to the last year's quarter? And what kind of forward guidance they're providing. Guidance is really important because that will determine the short-term sentiment of the stock. And what you see here was XPO actually did fall after their earnings because of less than expected guidance. So as you can see here, I want to scroll down to the CEO's comments. Usually the chairman or a CEO will explain what is going on, and I think this is really key to understand what was going on in the company. So Brad Jacobs, the CEO of XPO, explained that the company-wide, they had a really excellent third quarter, beating revenues and had a solid beat. And their truck brokerages businesses is what had some of their strongest growths, while their less than truckload results were mixed. And less than truckloads, as we discussed, is something that's really important because it's a newer part of their business that they're trying to grow. So he explained that in North American truck brokerage, every major metric was up year over year by large double digits. So actually in this sector of their business, they did perform better year over year, which was a 62% increase in net revenue from their truck brokerage, or a 37% increase in load count per day. Our top customers increased their total volume with us by 45%, and our share of wallet is trending up with key customers. So they did really well in the truck brokerage side. And then he explains what was the reason that they were having an issue with the LTL, which is less than truckload. And so they still had the strongest yield growth yet, which was up 6% year over year, but it wasn't to the what the analysts had expected. And that was the main issue, that it did not meet expectations. So we took actions that are gaining rapid traction. Our yield growth accelerated again in October, and our network is more balanced now than it was a few weeks ago. We're still targeting at least $1 billion of adjusted EBITDA and less than truckload in 2022. And over the next 12 to 24 months, we plan to invest more capital to expand our North American LTL door count by approximately 6% in key metros, following the 264 door Chicago Heights terminal we just opened. So essentially what they're saying here is, even though that they fell a little bit short on the year-over-year growth estimates for LTL, they're expecting a really good 2022. And so the CEO further stated that they raised their 2021 guidance for the full year and adjusted EBITDA to 1.2 billion to around 1.23 billion. And then their adjusted EBITDA increased to 300 million to 305 million. So the guidance was a little bit not as strong, and that's why what you saw was reflected in the stock when it sold off after their earnings. They mentioned the third quarter results by segment, and as we could see that they had the spin-off of GXO, so logistics had separate, and then their freight and less than truckload and brokerage separate as well. So these are the numbers for their generated revenue. It's $1 billion third quarter 2021 compared to 933 last year. It's good, but not good enough. So we need to see hopefully double-digit growth next year going into 2022. So as you can see, Earnings Whispers is a really good source. It will cover all the details as well as even the forward-looking statements, which is really important as well. And here you can see basically with every earnings report comes similar to the 10Q. They have the updated 3 months ended and 9 months ended data for financial statements for XPO. And as you can see here, the revenues did suffer from they did improve, from 2020 to 2021 within cost of transportation services, and operating income did increase from the 9 months to 2021. But when you look at it on a 3-month period, you can see that operating income had been reduced. They did report a net income loss of 57 million, and so that's one thing you want to keep in mind, that they had a net income has gone down in 2021. So just something to look for. And again, so this is just a balance sheet, shows the current assets and current liabilities. And this is the cash flow statements, which is something we already looked at through E-Trade. So essentially, you'll find many of these numbers in many different resources. You'll through the earnings report, to the 10K, to the 10Q. But I found it best that if you can take your brokerage, such as E-Trade or Fidelity, you can get a really good report that breaks down and highlights all the key information and numbers that you want to look at. And just to make sure, a second check you can have is checking back with the 10K to 10Q to make sure the math adds up and the numbers are right. So this was an earnings cheat sheet I had. Some questions you always want to ask yourself is, how did the company perform over the last quarter with the earnings now? And how did the performance compare to the previous quarter or the same quarter in the previous years? So it's all about the year-over-year growth and quarter-over-quarter growth. Have the revenues improved or taken a hit on a quarter-to-quarter basis? And as we saw with XPO, they are increasing over year to year, but maybe it's just slightly less growth in certain segments of their business, which would be the less than truckload. And another thing is the cost of sales increasing, meaning that is it more expensive to bring in revenue? Whenever a company is taking on more costs, maybe it is to grow certain parts of the business like XPO is doing, they might see a little bit of a loss in revenue. But as we see here that all across the board overall, XPO performed really well in their earnings reports. It's one sector that the CEO has made a mention on that they need to focus on. And now with this split with GXO and XPO, you can understand that the focus is going more towards that their logistics side of the business is separate and their freight side of business is separate. So looking forward with their guidance, they should be able to improve those growth revenues for that segment. And then the last question I would ask myself is the company providing weak or strong forward guidance? And like we said, guidance is so important when it comes to earnings reports because this will make or break a company. You have a company like Intel, which provides weaker and weaker guidance, and they blame it on things like supply chain issues and whatnot. And you have companies like AMD that keep providing stronger and stronger guidance, and you see that reflect in their stock. So with XPO, I believe that we're in a similar situation where we can see that there's a lot of demand within the logistics and freight transportation business. So as long as they're able to keep growing and fulfill that demand in 2022, they will be able to perform better in their next quarter and hopefully provide better guidance, which would make the stock perform better. So in conclusion, we want to keep reading all these reports as simple as possible. Follow a checklist and look at the 10K or annual review as a full scope to start off with. Break it down into the 10Q for the consolidated quarterly financials, and then look at the earnings reports to get a more accurate analysis of the company's results and performance for the quarter. And then another thing is we want to find the information that stands out to us within these reports. What is an outlier? What do they have a one-off expense that, or one-off increase in revenue that might not happen every single quarter? Did they have a tax liability or tax credit? What was the cause of that? And so those financial statements will give you that information. We also want to look at, what are the risks or successes in the business explained by management. Management will always give you a heads up of what's to come and why the issues that they had facing the past year or past quarter, what caused them. Lastly, we want to use the data and facts that we get from reading and interpreting these statements to create a solid fundamental understanding of a company. So remember, always check the vitals, the income statement, balance sheet, and cash flows. And these are the resources that I've found that were very useful when researching these statements. Like we see here, is SEC Edgar is basically the database from the SEC that will pull any financial reports that you want to look at. You have the investor page of any company's website. So XPO has an investor page, and they have the 10K, 10Qs, even the 8Ks, all there for you to download as a PDF. Earnings Whispers, this will give you that calendar for any upcoming earnings, their dates, and as well as all the breakdown of the transcript from the call and the slide decks. Quarters, the app that we mentioned before, very good app, highly recommend. And once again, we could always look back to the come up series with the information they provide. And School Spirit episode was very great when it came to covering the fundamentals. But a really good way to look at the financial statements, as I said before, when you compare it to 10K or 10Q, would be to go to E-Trade, go to the fundamental tab when you have entered a ticker, and look at the income financial income statement, cash flow statement, and balance sheet on an annually and quarterly basis. Same thing with Fidelity. If you type in the ticker, go to the bottom right of the page, you'll be able to see a section called financial statements and SEC filings. You want to click that and you'll be provided all the information. Lastly, I provided a video going more in depth in the annual report if anyone would want to learn how to read that as well. And this was a link to XPO's investor resources. So that's all I have for everyone. Please let me know if you have any questions, and I hope you got value out of this.
Wow, that was nice. That was amazing.
Man, I was fired.
Saheem gonna say that's all I have. Bro, what you mean? You just laid it out from from the ABCs to how to put together a sentence. Like, that was great. Like, I mean, what else is there to say, bro? He did that. He set the bar standard for this series, bro.
The more you learn, the more you earn. And
no, that's a fact. Because you taught me some stuff. I needed this little refresher right here.
Facts. And he hit the timing on the head too.
Man, what? I mean, the consolidation of the info. I mean, gave us a perfect example. Walked through an example with you with XPO. So, I mean, that was lit. I mean, gave you all the resources, gave you the checklist, the fire checklist, so you can go home and do your homework and practice with your own company, right? So that you can get better. Because like he said, the more you look at these documents and statements, it'll become second nature to you.
Absolutely, 100% agreed. The checklists are really key. If you bring those in and just keep practicing with all the companies you're investing in, look at the companies and just go through the checklist, ask yourself these questions and see what you can get out of it once you put all that information together. You'll be surprised by what you can see and how you can make some amazing, investments.
No, the culture appreciates you on this one, Saheed.
We definitely appreciate you, Saheed. We appreciate you, bro, for putting this together. My man put this together in a week. I hit him like last week, and he was like, "That's nothing." Like, he ain't make no complaints, no excuses. Put it together, very good, very concise. For everybody who be asking, like, how do you find a moat? How do you create a thesis? How do you make a bear case? How do you find catalysts? How do you find risk? What's funny about all those questions is the companies that y'all investing in or trying to trade give you that information. You just have to read it. So my man broke it down. Our cousin, he broke it down so that you're able to read this information properly so that you can find these things in the midst of, the 80 pages that they might put out. You're able to kind of pinpoint some of the key points that you need to find for yourself. Now, if you plan on putting a lot of money into this company, whether it be through options or buying the shares, you might just need to go ahead and read the whole thing. That might be beneficial to you to know the ins and outs of the company and all the headwinds that they see, all the tailwinds that they see. And then you'll be able to add your own thoughts as you get better and better at evaluating companies to decide if this is a good investment long-term or not. Because y'all know at the come up, we focus on the long term. I know some of y'all dabble in the weeklies, the scalps, the dailies. That's cool. But the real money is in the long term. So reading reports like these, staying up on your companies every quarter, even if you as an ETF person, you might like XLK. That means you need to be going through Apple and Microsoft 10Ks, 10Qs, annual reports. You feel me? So if you ever need some assistance, go back and look at this. I didn't see too many questions in the chat. If y'all got any questions, we might could sneak in a couple. We started a little bit late, so I'll give y'all like 5 minutes to ask Saheed any questions that you might have. But yes, this video is going to stay up on this channel. We're going to make a playlist of all the supplemental Sundays as well. So if you have a question about how to do this stuff, if somebody have a question about, some of this stuff, rather than going to another channel or paying for a course or something like that, you could just refer them to this video. It's very clear. It's not super complicated. We keeping it very simple. You feel me?
You catch that little gem he gave about Autodesk, bro?
Man, listen, I
heard his little gem. He slid that one in there.
Facts. I've been like shoulder deep in Autodesk this whole weekend because I'm trying to decide whether I really want to, do something to that stock. You feel me?
Oh,
You
okay.
got
So
to do
you
your
reading the full
homework.
10 Qs and 10
The
Ks on
full
Autodesk.
thing.
I feel
I'm
you.
reading the old ones. I'm reading the analysts got to say. I'm reading what the customers got to say. I'm
Facts,
reading all of that.
facts.
So yes.
That's key. That's key.
That's
I mean,
key, no,
and,
for real.
and even see with Autodesk, right? They actually have had some of their best quarters this year. And why is that?
They did.
They were actually just recently became a software as a service company. So
They
you're seeing
did.
them. They have the
They did.
potential. They're so established. They have the potential to grow as high as these other software as a service companies. Think of
They
things like
do.
Cloudflare. Think of things like Unity. People don't think of them because they're kind of in the back and they're kind of old school. But what do we see with companies like Fortinet and Palo Alto? Also old companies. What did they do? They adopted. They went to software as a service, and they are doing amazing.
That's a fact.
No, you're
Yo,
right.
it's
It's
funny.
everything as a service now.
It's funny that you mentioned that because in doing my homework on that, I did see that this most recent quarter where they had that head scout after earnings, that was their best quarter yet. And their business model that they switched to is working. People are skeptical that it's going to work in the long run because it is such an expensive software. But you got to remember, this is the software that they use to teach in trade schools and universities. And then I wasn't even aware previously. I knew about AutoCAD and all of that, but I wasn't aware that they have like a 3D animation software as well that was used to make like Monsters Inc. It's used to make Call of Duty, Halo, like a lot of these complex animations come from Autodesk. Like they stem from that same company. And so it's a lot going in, man. I'm telling you, I've been into that fundamentals way too heavy. Like I had to go to bed last night. I was all the way up looking at that stuff. But yeah, Autodesk is a good one to look at. Matter of fact, if y'all want some homework this week, watch this video over again. And instead of doing XPO, go through it with them with Autodesk pulled up. Everything that he talking about in here, pull up a totally different stock. It don't have to be Autodesk, but if you want some homework, you just looking for something, do Autodesk and pull it up side by side with the video. Go through what he's talking about, but in terms of Autodesk or a different company, so that you're really getting the gist of learning it. It's like when the teacher do the examples on the board. Yeah, now you know how to do them examples, but can you apply to a different set of numbers? You feel me? So make sure y'all really practicing this because this is what's gonna keep you in the game. Because what Mark does, he gives you his evaluation after he's looked at all of this stuff and formulated his own thesis. Now, God forbid anything ever happened to him, or he really hit a lick and he like, man, that come up stuff is cool, but I got a Billy now. Deuces. You got to know how to formulate your own thesis.
No, for real. And so he literally broke it down for y'all.
He did.
You really have no excuse. He gave you a checklist, like out of all the information out there, you could be all over the place. No, he tells you exactly where to start, what to look at, what to go to next. So like you literally have no excuse but to sit down and just practice it. Follow the checklist. Print it out if you got to. Take notes, put it to the side. I don't care what you got to do. But just start following the same habits because y'all, like, this is literally, we have to learn how to fish. And most importantly, teach somebody else how to fish because that's when you really got it. You know what I'm saying? Like if you have the ability to be able to teach your child how to break down a company, have them break down one, do it together. Like just find whatever creative way that you and your family got to do to pass this knowledge on. Like this is serious stuff, y'all, for real. So he did an excellent job. So don't take it for granted. Actually utilize this video and play it back. It's a good one.
Mm-hmm. We have to be scholars, This is a come up series. It's a different level. It's a different level. And when we arm ourselves with this knowledge and use all these tools that have been provided to us from Mark, from Jolynn, from all the cousins, all the mentors, everyone, you have a whole arsenal ready to analyze you'll know these stocks in and out better than analysts do. There's a lot of analysts out there can they provide the same kind of research that is being shown on the Come series, episode to episode? You have the bull and bear case episodes. You have so many.
Exactly.
That's a fact. Hey, bro, did you want me to put this presentation out? I just want your blessing on that.
Yeah, of course. Yeah, it's. I want to. Hopefully, it'll be available to everyone. I sent the link earlier, but
Yeah.
if I could try to make sure that link is something where everyone can download it as well and make a copy of it. So the checklist is out there.
I can make that happen. You sent it to me. I could put it out if you want me to.
Yeah, for sure. Let's do that.
All right, bet.
Maybe we can also put in the link in the description too.
Facts. I'm gonna put it in the description. Y'all know I'm gonna put it in the Facebook group for the real family members. But yes, it is going to be in the description. So when you go back and watch it, you'll see it right there. I'm gonna upload it as soon as we get off of here. But outside of that, really don't want to hold y'all too long. My man was on time with it. Like you don't even know flawless. How much I respect that.
It was flawless, beginning to end, bro. Like,
can I be honest with y'all? I was not looking at the time at all. This was just off the dome.
You capping, but I'm gonna let you cap. I'm gonna let you have that. I know you capping. You gotta be capping, but I'm gonna let you have that.
This was the first time going through it. It was just going with how it's going.
He was talking all that noise. He was like, "Yo, if it's too long, just let me know." I'm like,
man,
"Bro, it's perfect."
Bro hit it dead on the hour.
And it was concise. Like he laid out all the information that I would cover. Like it was great. Came with a checklist. I mean, I couldn't ask for anything better. Excellent job, Sahib. We thank you again, man.
That is a fact. That is a fact. But all right, y'all, man. Y'all be good. Say y'all prayers before y'all go to sleep, because I know some of y'all didn't go to church. But we appreciate y'all being here. Y'all could say, AJ, Sahib, you could close the people out.
Boy, I swear, when the Rams win, you act brand new. Like you act so
man, come on, bro. You know what it is.
But no, it's a pleasure to see so many. It's a pleasure to see so many of the family out on Sunday night. So make sure y'all follow and tune in as we start this new series, and make sure you learn. So tap in with us next Sunday, same time, 8 p.m.
I
just want to say, let's wrap up the year strong. A lot of us came into this. I came in January 2021 as a freshman, and we're going into our sophomore year. So let's just take the most out of this and learn as much as we can from all these episodes. Take notes, work hard, and the results will show in your portfolio.
All right, y'all. Be easy. Do some homework. One more time. They are not going to be live on Tuesday or Thursday this week. So you got to put it on yourself and be disciplined to do something. Do something on Tuesday. Do something on Thursday. I don't care if it's this or it's something else, technicals, whatever. Do